Hello guys, and for today's video, we are going to talk about the introduction of accounting information system along with the 15 questions provided to us by our instructor, Mr. Ramoga. So the first one is that what are the different responsibilities of operation management, middle management, and top management? And what are the different information needed for each level of management? For the operation management, it is directly responsible for controlling day-to-day operation. Operation managers require detailed information on individual transactions such as sales, shipment of goods, usage of labor and materials in the production process, and internal transfer of resources from one department to another. Budgeting information and instruction flow downward from the top and middle management to operation management. For the middle managers, they perform short-term planning and coordination of activities necessary to accomplish organizational objectives. Middle management requires information that is more summarized and oriented toward reporting on overall performance and problems, rather than routine operations. For the top management, it is responsible for the longer-term planning and setting organizational objectives. Information provided to the top management is highly summarized. The second one is, what is the difference between data and information? So of course, data are facts which may or may not be processed, such as edited, summarized, or refined, and have no direct effect on a user's action. While the information causes the user to take an action that he or she otherwise could not or would not or have taken. The information is determined by the effect it has on the users. So next is, why do accountants need to understand the organizational structure of a business? So of course, for me, the structure of an organization reflects the distribution of responsibility, authority, and accountability throughout the organization. Auditors need to know how the organization functions to properly audit the organization. So there are several disadvantages of distributed data processing. The first one is that distributing the control of information resources can lead to mismanagement of organizational resources. The second one is that hardware and software incompatibility can result. Third one is that distribution of responsibility can result in many users performing redundant tasks. The fourth one is that individual user control can lead to internal control concerns when users perform incompatible duties. The fifth one is that small organizational units may have difficulty hiring qualified IT professionals. And lastly, distribution of decision-making can result in lack of standards. So there are three major subsystems of the accounting information system, namely transaction processing system, which supports daily business operations with numerous reports, documents, and messages for users throughout the organization. The second one is the financial reporting system, which produces the traditional financial statements such as the income statement, balance sheet, statement of cash flows, tax returns, and other reports required by law. The third one is management reporting system, which provides internal management with special purpose financial reports and information needed for decision making such as budgets, variance reports, and responsibility reports. So what are the three primary functions performed by the transaction processing system? First is that it converts economic events into financial transactions. Second, it records financial transactions in the accounting records. And lastly, it distributes essential financial information to operations personnel to support their daily operations. The most commonly stated benefits of DDP are cost savings, increased user satisfaction, and improved operational efficiency. The cost of both processing and data storage have declined significantly in the time since early automation. In addition, data entry can be distributed and application complexity reduced. Users are typically more satisfied when they can control the resources that affect their profitability. Also, users want systems people who will respond to their needs and involve them in development and implementation of their own systems. And lastly, delegation of cost control to individual units leads to more efficient use of unit resources. Data redundancy is described as a problem in flat file systems due to data storage, updating, and currency issues. It is also because information systems have limited collections, processing, and data storage capacity. Data redundancy overloads facilities and reduces the overall efficiency of the system. Inconsistency among redundant data elements can result in inappropriate actions and bad decisions. So there are three elements of REA model, namely the economic resources, economic events, and economic agents. The economic resources are the assets of the organization. They are the objects that are scarce and under the control of the organization. They do not include accounts receivable, and an example of this is an inventory. The second one is the economic events. These are the actions that affect changes in resources. An example of this is a sale to a customer. And lastly, the economic agents. These are the individuals and business units that participate in the economic events. An example of this is a sales clerk. Next is the difference between accounting information system and the management information system. Management information system is a system that processes non-financial transactions not normally processed by traditional accounting information systems. All information coming from various resources about different aspects of the business is collected and analyzed through computers and produce a detailed report that becomes an effective tool for managers to organize, evaluate, and efficiently run their departments. While accounting information system is a specialized subset of information systems that processes financial transactions. This pertains to a systems of keeping record of accounting books and financial statements along with sales and purchase records and other financial transactions.
So why have re-engineering efforts been made to integrate AAS and MIS? It is maybe because managers of all areas typically need data from both the AAS and the MIS. If the data needed by managers for decision-making processes are allocated in two or more datasets, the preparations of reports is both inefficient and expensive. Further, a lack of coordination between the two datasets can result in data that is not consistent and is unreliable. So why is it important to organizationally separate the accounting functions from the other functions of the organization? It is because the accounting functions provide record-keeping services for all of the operations and the day-to-day activities of other departments which affect the financial position of the organization. Record-keeping tasks must be kept separate from any area that has custody over assets. Thus, the accounting functions must remain independent so that the protection of the firm's assets is carried out in an environment with minimum possibilities for theft. The REA model requires the accounting phenomena be characterized in a manner consistent with the development of multiple users' views, not simply those of the accounting functions. As such, REA procedures and database are structured around events rather than accounting artifacts such as journals, ledgers, charts of accounts, and double entry accounting. Under the REA model, business organizations prepare financial statements directly from the event database. So the advantages of ERP or enterprise resource planning is that it enables organizations to automate and integrate key business processes. It breaks down traditional functional barriers by facilitating data sharing. It embodies and supports the best business practices of a given industry, thus encouraging positive changes in the way firms do business. And lastly, organizations experience internal efficiencies by employing standard business practices among all organizational units. The implementation of an ERP system can be a massive undertaking that can span several years. Because of their complexity and size, few organizations are willing or able to commit the necessary financial resources and incur the risk of developing an ERP system in-house. Hence, virtually all ERPs are commercial products designed to solve standardized business problems. Many organizations have unique needs that require customized systems. Next is that organizations that implement an ERP often need to modify their business processes to suit unique business functions, particularly industry-specific tasks. These applications, often called bolt-ons, are not always designed to communicate with ERP packages. And lastly, ERP packages are enormously expensive. Organization management should exercise great care in deciding which or if any ERP is the best for them. So for the last question, distinguish between centralized and distributed approaches to organizing the computer services function. In a centralized data processing approach, the computer services function is centrally located. The database are housed in one place where all of the data processing occurs by one or more main computers. All systems development and maintenance work of the entire organization is performed by systems professionals. End users wishing to have new systems or features must submit a formal request to this group and are usually prioritized and placed in a queue. In a distributed data processing approach, The CPUs are spread out, and control over data and processing is at the information processing unit or IPU level. Thus, end users have more influence over the system's development projects, which are typically handled by systems professionals at the IPU level.
Thanks for watching, guys. Keep safe and God bless.